So everybody by now should know what a blockchain is. Yes? Yes, is that right? Okay, good, because I really don't. And everybody here should know by now how the smart contracts work. Yes? Sort of? Sort of. Okay, so I am a commodities marketing and trading lawyer. And you're probably thinking to yourself, why is a commodities marketing and trading lawyer up here talking at a blockchain conference? And that is because I believe that the blockchain technology can be used in the commodity trading life cycle. That is something that I've written on extensively, I've spoken on extensively. How it can be done, I have no idea. Again, you're probably thinking to yourself, how the heck can someone stand up here and say, I have no idea? But I really have no idea of how it will be done in particular. I have an idea of how it could be done conceptually, and so I'm kind of just getting it out there as to how I think it can be done conceptually in what I do as a lawyer, and I'm probably talking myself out of a job. But that's the way of the future. That's the way this is going to go. And I'd rather be at the forefront of that than at the back end of that. So is anybody here in energy commodities trading at all? You are. Okay. So this may be a refresher for you, but I want to take everyone through this really, really, really quickly. I want to take everyone through the energy commodity trading life cycle. Is there anybody else here, just one in energy commodity trading? Anybody else? Okay. So there are 3 stages when you are trading energy commodities. Okay, there's the pre-trade, right? The things that you need to do to prepare to trade, which is the buying and selling of the energy commodity. There's then the actual trade execution. And then there is post-trade execution. So I'm going to take you through those 3 stages. And every time I do, I want you to think about how many systems and how many departments and how many contracts I'm telling you about as I'm going through those. Oh. 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 Well, it may or may not work. I don't have enough hands, but.
Yeah, I know. That's what I was saying. So.
Oh, okay. So the pre-trade, okay? There are so many departments involved to get ready to trade energy commodities, okay? So it comes out of the ground, and then somebody has to buy and sell it, and we have to move it throughout the country to then have it be consumed by the consumer, okay? There's a legal department. There's the credit department. There's the compliance department. There's the analytics department. There's the operations department. And there's the risk department. That is 6 departments, usually each of them having their own system. I know in the legal department, I have a document management system, right? But the traders don't have access to the document management system, okay? So what happens before you're going to trade commodities is the legal department will begin to develop your standard terms, your contracts. Now remember that, because that's important for when we go to the end and we start applying smart contracts here. So the legal department sits down with the traders and the operations and the risk and the head management, and they start putting together their contracts. What type of risks, what type of legal risks you want to accept? Where do you want delivery? Where do you want title transfer? All that has to be developed before you trade. The compliance department has to be involved. The compliance department has to set up standards, has to set up manuals, policies, and procedures. Commodity trading is highly regulated. Okay, there are many regulators here. There are 2 main ones, 3 if you're talking about crude, the CFTC, the FERC, and then the FTC. All of them have different rules as to how you trade the commodity. So the compliance department is involved in the beginning to make sure that from the beginning you're not breaking a rule. Okay, the risk department, the credit department is involved because you need to, a lot of times in what we do, you're trading directly with another counterparty. Okay, there's also trading on an exchange, almost like a stock exchange, right, where you don't take a lot of credit risk. But in commodities, you can trade directly with another counterparty if that counterparty is large enough. So you need to have a credit department setting up a system and a process that says, I'm going to trade with you because I know you have enough money to pay me back. And all those things have to be developed beforehand, before you can trade. Because if you trade with someone and you sell them a commodity, it's a lot of money. And if they can't pay you, that's a problem. Okay, and then the risk department is involved because every time you do trade a commodity, usually you trade it far out. So every time the price changes, which is changes every day based upon supply and demand fundamentals, the risk department has to make sure that transaction is still valuable to the company, or do we need to hedge some price risk here? So again, the risk department has their own systems and mechanisms to pull in the trade information, and they have to have it all set up before you begin to trade. And then there's operations. So operations is very important because, again, it comes out of the ground, but somebody has to move it somewhere. Somebody has to put it into a pipeline. Somebody has to pull it out of a pipeline. And all that is done through a separate system, an operation system, which feeds a separate system, which is a pipeline system or a transmission system, all outside of the commodity trading firm. And that is just to get ready to trade energy commodities. Then the trade is executed. This one's probably, you're thinking, the most complicated, but it's not. The trade is executed. The counterparties agree. It's entered onto the futures exchange, entered onto the ICE exchange, and it's cleared. It's agreed. It's executed. That takes a trade capture system. That involves the front office. So the trade capture system is another system. But then you have the exchanges, and then you have the clearers. Okay, all three separate things, all of which happens at the trade execution phase. But again, at the trade execution phase, you also have to have the risk management department involved and the credit department involved. Because once you execute that trade, the company is taken on risk. And so the front office will execute, they have to enter the information into the trade capture systems, and then immediately that trade capture system has to feed a risk system because there has to be real-time measurement of risk. And then immediately that has to feed the credit systems, because remember I told you before, the credit group has set up, you know, what kind of credit exposure they want to have between him and I, right? So they have to manage it real time. And that's the trade execution phase. Does anybody have any questions about those two phases so far? Anybody keeping track of how many systems we have so far? No, right? That's a lot. It's hard to keep track. I'm telling you right now, I'm up to about 15. And I got about 7 departments so far. And we're not even done. Because the largest part of what happens when you are trading energy commodities happens after the trade is already done. Because like I had said to you, you know, you don't just buy, it's not like buying pencils where you walk into the store and you buy a pencil and you have it in your pocket and that's today. And, you know, if the pencil breaks or whatever, it's your risk, right? A lot of times when you're buying an energy commodity, you're agreeing to doing something today, but delivery can't happen until, you know, a month from now. Or you're agreeing for multiple deliveries months and months and months and months for a year, right? And so you're locking in the price today. That's price risk. So after this trade happens, so many more departments are involved. Because not only do you have price risk, but you have logistical risks. So we're done trading now, but still we need to have, here we go, we're adding to our list of departments. You have the confirmations group. Again, the risk group, they're very busy, this risk group. The credit group, the settlements group, the legal group, because what happens after you trade with somebody? They say, oh, you said you were going to deliver it to me here, and you delivered it to me there, and you argue, so the legal group is involved. Or the legal group is involved because, like I said before in the beginning, do you remember when I said we set up our standard terms? And remember that because it's important for smart contracts? Someone's not accepting your standard terms. So the legal department is involved after the fact, because if someone isn't going to accept delivery where I'm saying and they want to negotiate, that's a negotiation. There's also a negotiation, believe it or not, over the law that governs the transaction. I'm in Texas. I'm a Texas lawyer. I'm also a New York lawyer. I'm also a DC lawyer. I tend to like Texas law. It's better for my client, which is usually, my clients are usually the companies, right? It's better to have something settled here, costs us less money, but that could be a negotiation point. So after you're done trading, the legal department gets involved. The settlements department gets involved. That's 9. The finance department gets involved. Again, that's 10. The confirmations department has their own system. So remember I told you put everything into the trade capture system and the risk pulls it and the credit pulls it. The confirmations group also pulls it. So now I have the confirmations group pulling the information into their system because they need to confirm the terms that we agreed as front office people when we were executing. It's crazy because it was already entered and pulled, and it was probably entered from something that was either done over the phone or something that was done on an exchange. And now you're 3 systems removed before you can even get to the point where you're both confirming or solidifying that, yes, this is what I agreed to. So again, we're at another system here. And the only other process that happens here is settlements, because at some point, money will have to change hands. So at some point, you have to have an accounting group, which is pulling the information again, not from the trade capture system, probably from maybe the confirmation system. I'm not sure, maybe a combination of both of them. Some people do it that way to say, okay, I sold you 10, you actually bought 0.9, because what happens is as things go on the boats or as things get in the pipeline, there's shrinkage and stuff like that. And this is what you owe me. And then the finance department is involved because when I say you owe me and then you don't, it's a problem. It becomes like accounts receivable, and as it ages, it becomes a problem for our finances, and we need to report that if we have shareholders or things like that to our board, right? So those are more departments that are involved, and that's what happens after the transaction. So that is the energy commodity life cycle. Anybody have any questions about that? Confusing, right? It's a lot of departments, right? I think I said about 10 departments. I think I'm up about 5 systems. It's a lot. It's a lot. It's a lot to do. Technology is bad. The technology is antiquated. The technology allows for a lot of mistakes because it's a lot of data entry. It's a lot of personal data entry. Just think about that. You and I, we thought we bought 10 pencils, but the operations person who's putting it in the truck for me to deliver my pencils to you wrote it backwards. She wrote 01. You only get 1 pencil. It's not captured. It's not picked up anywhere because our agreement was over the phone. Again, that's a mistake. It's a data entry mistake. How do we get rid of all these mistakes? Why am I even typing that in? Why is she typing that in? You and I already agreed, right? So there's all these people and all these places where you can have mistakes, and that's where I think blockchain technology can enter the scene. How it can enter the scene, I am not a technology person, but that is where I think it can enter the scene. I think we can get rid of lots of data entry points. I think we can get rid of lots of different systems. I don't know if you guys learned earlier about the different types of blockchain environments. Did you guys learn about that already? You guys learn about that? Yes? No one's answering me. Yeah? Okay. So now what I believe will happen here, and what is happening, what you see companies like Any doing and Trafigura doing, is they are creating what's called a private blockchain environment, where only certain companies are allowed in the blockchain environment. It's private. You're not allowed in. And there are predefined terms for that blockchain environment. So this is how I think this is going to work. And I think that the best way to take you through how I think this is going to work is to take you through a natural gas transaction. I know I was talking about pencils, but I want to take you through an energy natural gas transaction. So is anybody here involved in natural gas? You do natural gas? What do you do? Electricity? Okay, so this is going to be a little different, all right? And I only use natural gas because natural gas has the component of the pipeline, all right? So I want you all to pretend that you are natural gas traders, all right? You are natural gas traders, and you are able to participate in a private blockchain environment. What we would do is, if I wanted to be part of your blockchain environment and we were private, is we would establish inside our blockchain environment all the algorithms, all the terms between which we want to buy and sell natural gas. So do you remember how I told you the legal department defines the terms, and I'm probably talking myself out of a job? What we would do is we would say, you want to be in my environment? Okay. Well, then you agree that when we're selling natural gas, the delivery point is at the entry point of the pipeline. You want to be part of my blockchain environment? That's where we say we're going to take risk. That's where it is. We say that. We're done. You want to be part of my environment? We say that if you're going to be part of my environment, all of our transactions are going to be governed by Texas law. We say, you want to be part of our environment? Remember I told you about the credit department? You have to be a certain size. You need to, before you can even become part of my blockchain environment, you need to be a certain size. I'm not going to accept any more credit risk. So again, I just have gotten rid of the legal department, the credit department, and I'm about to take it even further and say that we probably don't even need at this point a separate risk department, because what you would do is the risk would just become, the risk departments in your company would just have access to this information, right? But we've mitigated our risk. Okay, we've mitigated our risk because we've already agreed before you become a part of my blockchain environment that we're going to have delivery here. We're going to have Texas law govern, right? We're going to trade on this pipeline. So what happens is it's all kind of wrapped up in a smart contract. So if I'm going to buy and sell natural gas with you, a smart contract is put in there with all these terms, and I say I'm willing to sell, 1,000 MMBTUs of natural gas, and you're willing to buy 1,000 MMBTUs of natural gas. You would set up your smart contract to wrap your blockchain environment with if-then statements. So if someone's willing to sell 1,000 MMBTUs of natural gas and someone's willing to buy it, it will automatically execute at the prices in the market, because you have to trade at the market prices. If you're not trading at market prices, it's illegal, right? Again, we can make a regulator have access to your blockchain environment. They can see that you've agreed to execute it at market prices. Now, what that means for pricing and arbitrage, I don't know, because like I said, I don't know what the implications will be. I don't know how it'll actually be used, but a risk is reduced. That's a risk. It's a risk that a trader will say, wink, wink, nudge, nudge, you're going to pay me $5 over the market because you're my friend. That's all gone. So then what happens is the transaction is executed, and it is essentially set in stone. Well, you already know that, right? Because you've learned already about the blockchain. And it is actually able to be seen by everyone in the blockchain environment, which can include your credit department, your risk department, your legal department, your settlements department. You don't need a confirmations department anymore because it's confirmed. And then an algorithm is wrapped around that, and it's chained to the transaction in front of it, or the transaction behind it. And the chains remain in place, mitigating the risk of someone going in and inadvertently changing something that you've already agreed to. So what would happen now, right, is your operations department doesn't need to re-enter or pull out. Remember how I said in my example, I've delivered him one pencil by accident? None of that would happen, because it would automatically feed, because you can also have smart contracts go the other way, or information go the other way, where it would feed, your environment would feed in my example for natural gas, the pipeline bulletin board. And so it would be done less data entry, less mistakes, less personnel, probably myself, right? Less personnel. Think about it. Are there going to be any more? Well, there may be. I'm not sure, but think about the reduction of disputes, because it's automatically executed based upon an algorithm that we set up, and math is math. And this is coming from a lawyer, and I'm saying math is math, and math is pretty powerful here in this whole scenario. So I think that that's how this is going to happen. I think that it will be used in a way which will create more efficiency, more effectiveness. It will reduce error. I think that it will allow us to have a better relationship with our counterparties and our regulators. One of the things that someone always asks me at this point is, well, how can that be legal? I don't think that's legal. Right now in energy commodities, there is what they consider a forward contract exception, right? And there's also exceptions to the rules about trading on futures exchanges and things like that. And all those things can be baked into your algorithm right up front. So you can make sure that you're always following the rules. And you can probably forget about having to report to a regulator, because you can give a regulator access to your system and they'll get the transactions immediately. And again, that reduces risk. That is an efficiency. That is a reduction in cost. Because if you make a mistake when you report to a regulator, that's going to be a problem for you down the line. Some of the violations in this space are $1 million per day per violation, especially in natural gas. It's huge risk there, which will be mitigated because the information will be correct. The information will be validated because it will be executed based on an algorithm. It will be stuck in stone because it will be chained to the transaction behind it, and no one will be able to manipulate it or change it for their benefit, and it will be executed at market prices. So all that reduces risk. And I'm being told that I have no more time, that I have to wrap it up. I didn't even flip through the slides. You can get my slides, I think, right? We'll give you those slides so you can get through them because there's a more in-depth conversation in my slides about the CFTC and about the FERC here. But does anybody have any questions for me? Because I think I'm out of time. Okay, and my contact information is here too. Again, I'm so thankful that you stuck with me as the non-technology person that spoke to you today, but I think you can see where I'm coming from with this. I don't know how, but it will be done. And when it is done, you can say you heard it right here from me. You're welcome.